Every 4 years, the World Cup commands the attention of billions. But beyond the pitch, this tournament serves as a brutal, multi-billion-dollar stress test for the world's biggest apparel brands. Nike is blanketing the 2026 tournament with a massive marketing offensive, relying heavily on viral campaigns featuring megastars like Kylian Mbappé. Directly across the battle lines, Adidas has deployed its own heavy-hitting roster, anchored by their long-standing partnership with Lionel Messi. Down on the field, the fight for your attention is so intense that multiple brands have adopted identical, blindingly bright pink soccer boots simply to ensure their logos pop on television broadcasts. This line graph tracks the stock performance of both companies heading into the tournament. We can see a severe 30% plunge in Nike's valuation, a reflection of a brand leaking market share and desperate for a turnaround under CEO Elliott Hill. Meanwhile, this stable, upward trending line shows Adidas riding a wave of investor optimism. To a casual fan watching the ads and visiting the stores, Nike looks like they are completely dominating the tournament, yet the financial analysts on Wall Street are aggressively betting against them. Walk through any major U.S. market right now, and the physical footprint is undeniable. Nike has blanketed premier retail spaces like these Times Square billboards with towering World Cup displays. This bar chart visualizes the staggering gap in their digital marketing reach. Nike's flagship World Cup commercial pulled in 76 million views on YouTube, completely dwarfing Adidas's roughly 7 million. Staying on this data, the chart expands to show that Nike's sheer visibility translates directly to the cash register. They command a higher price point, selling premium jerseys for $125 compared to Adidas at $95, and consumers are buying them. Within the first 2 weeks of the tournament, 28% of Nike's U.S. World Cup merchandise sold out, compared to a mere 7% for Adidas. Behind those sales figures is a highly efficient supply chain. Nike moves its inventory off the shelves and converts those products into cash much faster than the broader apparel industry. But selling out a pop-up shop during a peak global event is a short-term metric. The true value of a World Cup campaign is measured by the long-term brand equity generated for the years that follow. If we look strictly at the flashy, front-facing metrics, sales velocity, ad views, and billboard space, Nike is decisively winning the scoreboard. However, these surface-level victories hide the structural decay causing their market share to erode. To understand the actual health of these brands, we have to flip from the scoreboard to the balance sheet. Institutional investors track back-end financial indicators, relying on analytics platforms to measure underlying corporate stability. On the pitch, Adidas controls the most valuable, sustained visual real estate. They sponsor 14 national teams, and as the supplier of the official match ball, their logo sits squarely in the center of the action for every single minute of play. Adidas has also successfully embedded their apparel into global streetwear culture. Kits like this one for the Mexican national team have become everyday fashion statements for younger demographics, giving the brand relevance far beyond match day. This donut chart breaks down total social media volume heading into the games. It shows Nike dominating the conversation, claiming roughly 80% of all mentions, compared to Adidas's 20%. But volume is a misleading metric. Watch as the chart shifts to reveal the sentiment behind those mentions. A massive portion of Nike's 80% is driven by negative discourse and investor anxiety regarding their business outlook. Conversely, the 20% volume for Adidas ranks incredibly high in brand goodwill, translating to surging consumer trust scores. That deep consumer trust directly correlates with institutional investor confidence. Adidas currently holds an 84 out of 100 smart holdings score, meaning large funds are actively buying the stock, along with projected earnings growth of 22.2%. Nike faces a projected earnings drop of 6.1%. Predictive Wall Street models ignore viral YouTube videos. They measure structural institutional trust, a metric that consistently outperforms fleeting consumer attention. The ultimate prize of a successful World Cup campaign is the halo effect, a multi-year momentum boost where brand visibility sustains long-term sales growth. Historical market data from the 2018 and 2022 tournaments shows a clear pattern. Massive spikes in short-term retail sales during the event do not guarantee sustained stock performance in the years following the final whistle. Nike spent years severing ties with wholesale retailers to prioritize direct-to-consumer sales, a strategy that damaged crucial partnerships and dragged down their market sentiment. A single high-budget commercial cannot paper over those deep operational cracks. Instead of relying on a short-term sales blitz, Adidas translated their cultural capital into deep global integration. They built reliable supply chains, fostered positive consumer sentiment, and earned the conviction of heavy-hitting institutional investors. Securing the authentic, enduring trust of the global football diaspora requires a consistent presence in the culture. That is a distinctly different and far more valuable business achievement than rapidly selling out of premium jerseys at a tourist pop-up shop. When the final numbers are tallied for the 2026 World Cup, the conclusion is clear. Nike spent millions to win the marketing battle, but Adidas won the business.